Lucy, China has been a relatively open market to foreign car makers compared to Korea or Japan back in the day, but it has infuriated many electorates over the years that foreign car makers don't generally reveal how much profit they make in China. So for me, it's a little bit of poetic justice that antitrust probes are being launched in China against those car makers. What's the damage?
Well, antitrust probes have been launched against Mercedes, owned by Daimler, Chrysler, Audi and BMW, and that's what we know so far. For BMW, for instance, who announced numbers yesterday, Bernstein estimates that 50% of their profits come from China, and that's on 20% of their sales volume. So it's an enormous profit generator for them. And as you say, slightly poetic justice because they haven't disclosed this. Obviously, the car manufacturers themselves say that the pricing policy structure is different in China from overseas because of higher tariffs. But clearly, if those profit sort of estimates are correct, that's not the case. They are actually making a lot of money there. So potentially, for someone like BMW, if China fined them the maximum possible, which is 10% of last year's sales for monopolistic practices, that's 1.5 billion euros. Their first half profits were over 3 billion, so that takes off half their first half profits already. And the share prices have been relatively sanguine in their response.
Yeah, that seems odd. And what also seems odd is, why is China doing this?
Well, some of the argument has been that it's because it's anti-competitive pricing practices, and that monopolistic pricing practices, and that it's price gouging against the Chinese consumer, basically. And so this is to benefit the Chinese consumer, to bring down foreign car prices, and so on. It's quite hard to imagine that that's actually the case, because China at the same time wants to reduce the number of cars on its roads, and we've seen a surge in car buying lately to try and get ahead of the restrictions on registration plates in some cities. So it seems unlikely that China's trying to make cars cheaper. What it could be doing is trying to protect its own brands, or bring the foreign cachet, the pricing premium, down more towards its own brands, because China has been trying to develop domestic brands for some years now. For instance, forcing foreign partners to set up a domestic brand with a JV partner that's completely China, a China brand.
Would it actually help these domestic brands? Because as we've noted, China is an open market for foreign manufacturers.
Well, you made the point about Korea and Japan, and the answer is probably not, because Korean and Japanese cars did very well overseas off a strong domestic base, and the Chinese brands just don't have that. And what's worse is that the domestic private brands like BYD, Geely and Great Wall have been the ones most hurt by the SOE joint ventures with the foreign brands. So actually the policies have been all over the place, and it's really hard to see who's going to win from this.
Okay, we'll have to see what's down the road. Thank you, Lucy.